The current live price for Fitell Corp, trading under the ticker FTEL on the NASDAQ, is exactly 0.87 USD, as the market remains open during this Monday session on December 29, 2025. This represents a significant intraday jump of 0.14 USD, reflecting a move of 19.37% to the upside. While the broader market indices like the S&P 500 and the NASDAQ Composite have seen steady performance today, Fitell is capturing attention with massive relative volume, trading over 20 million shares compared to its typical daily average of under 1 million. This sudden surge is pushing the stock toward its daily high of 0.93 USD, a stark contrast to its 52-week low of 0.61 USD reached recently. While most retail traders look at a sub-$1 stock and see a dying fitness equipment company, the actual reality unfolding today is a complex financial maneuver involving a surprise dividend and a unique shareholder loyalty program that has caught the short sellers completely off guard. If you only look at the surface, you see a penny stock that fell from a 52-week high of 187.68 USD. But the real story is about a company aggressively restructuring its entire identity from a simple gym equipment distributor into an AI-driven robotics and digital asset player. This shift has created a massive disconnect between what the market expects from a micro-cap retailer and the aggressive capital return strategy the board just implemented. The general belief among many using popular investing sites or a standard individual brokerage account is that Fitell is simply another small-cap name struggling with NASDAQ compliance and the weight of its own past dilution. Investors often view these types of companies as speculative traps, especially after the heavy volatility seen since its IPO in August 2023. However, the contrarian view, which is fueling today's price action, suggests that the leadership at Fitell is using a very specific playbook to reward long-term holders and force a revaluation. By announcing an interim dividend of 0.10 USD per share and a loyalty program offering up to 0.15 USD in additional cash payments, the company is effectively paying out a huge percentage of its current share price back to investors. This is almost unheard of for a company with a market cap of roughly 4 million USD. If you were tracking this through Robinhood stock trading or the Fidelity mobile app, you might notice the massive spike in volume today is not just random speculation. Today, December 29, 2025, is the critical deadline for the shareholder loyalty program. To qualify for the extra 0.15 USD per share, investors must have their shares in book entry form with the transfer agent by the close of business today. This requirement creates a unique pressure point in the market because it discourages the typical high-frequency flipping seen on many trading platforms. Instead, it encourages a lockup effect where shares are moved out of the street name and into direct registration. This reduces the available float for short sellers to borrow, leading to the upward price pressure we are seeing at 0.87 USD. The recent movement is also a reaction to the company's fiscal year 2025 results, which showed a 16.4% increase in revenue to 5.2 million USD. More importantly, they managed to reduce their net loss by nearly 93% compared to the previous year. For those who utilize SoFi Active Investing or Interactive Brokers trading, these fundamentals suggest a company that has finally stopped the bleeding. The cost-cutting measures implemented over the last 12 months have lowered operating expenses by over 61%, allowing the company to pivot its remaining cash into higher growth areas. This financial discipline is the foundation upon which they are building their more ambitious projects, like the recently announced 2F Robotics venture. Comment below how many shares of Fitell Corp you currently hold, or if you are planning to take advantage of the loyalty program before the deadline today. Beyond the immediate price action, we have to look at what Fitell Corp actually does to understand the long-term risk and reward. Originally, the company built its business through its subsidiary GD Wellness as a retailer of gym and fitness equipment in Australia and Southeast Asia. They sell everything from rowing machines to exercise bikes under brands like Muscle Motion and Harrison. This legacy business is what provides the base revenue, but it is not what is driving the 19% gain today. The market is pricing in the potential of their new AI-driven personal robot chef known as 2F Culinary AI. This move into robotics, supported by a $50 million stablecoin-linked financing facility, is a total departure from their origins. When you look at your portfolio on the Robinhood app or through Schwab Intelligent Portfolios, you expect your small-cap holdings to be volatile, but Fitell is taking a path that mirrors some of the aggressive moves seen in larger tech stocks. Just as investors watch Tesla stock for its AI and robotics progress, or Nvidia stock for its dominance in hardware, Fitell is attempting to carve out a niche in consumer robotics for the home. The 2F Robotics platform is being developed in partnership with GZ Fukan Vanguard Intelligent Technology, focusing on advanced robotic systems that can perform complex household tasks. While it is still in the early stages, the company is leveraging its existing retail and distribution network to eventually bring these products to market. For those who prefer a self-investing approach or use investment help from platforms like Fidelity Wealth Management, the digital asset strategy is another layer to consider. Fitell has used its corporate treasury to purchase Solana and other digital assets, including a $15 million initial allocation from their financing facility. This makes them one of the few microcap companies with a diversified treasury that includes both cash and liquid crypto assets. This strategy can be a double-edged sword. While it provides upside if the crypto market performs well, it adds a layer of volatility that most traditional retail investors might find uncomfortable. However, at a price of 0.87 USD, many traders are clearly willing to bet on this hybrid model. The current trading environment for FTEL is high risk, high reward. The stock has been under pressure for most of the year, facing NASDAQ minimum bid price requirements and the threat of delisting. However, the recent 180-day extension to regain compliance and the aggressive buyback and dividend announcements show a board of directors that is fighting for its survival. When you see this kind of activity on the Interactive Brokers platform or the SoFi trading platform, it often signals a bottoming process where the company is doing everything possible to attract institutional interest and stabilize the share price above the $1 mark. Looking forward, the success of Fitell will depend on two main catalysts. First, they must successfully execute the payout of the 0.10 USD dividend in January and the subsequent loyalty payments without depleting their working capital. Second, the robotics division needs to move from a conceptual phase into a revenue-generating phase. The market is currently rewarding the bold capital allocation, but it will eventually demand proof of product market fit for the AI robot chef. If they can maintain their 39% gross margins in the fitness business while launching these new tech products, the current valuation might look like a deep discount in hindsight. Conversely, if the robotics venture fails to gain traction, the company could return to its previous downward trend. For an online investment to be successful, you have to weigh the expectation of a quick gain against the reality of a company's balance sheet. Fitell currently holds more cash than debt, which is a rare find in the penny stock world. Their current ratio of over 4 indicates that they have plenty of liquidity to cover their short-term obligations, which is why the board felt comfortable declaring a dividend in the first place. This financial stability is likely what is attracting some of the smarter investors who use Fidelity Brokerage or Interactive Brokers to find undervalued microcaps. They are looking past the retailer label and seeing a tech-heavy turnaround story. The contrast between expectation and reality is the driving force here. The expectation was that Fitell would slowly fade away as its stock price lingered near all-time lows. The reality is that the company is using its treasury to force a short squeeze and reward anyone who stays through the transition. This is why the volume has exploded today. People aren't just buying for the potential of the stock to hit $2 or $5, they're buying because they want that guaranteed cash payout from the dividend and the loyalty program. It's a very specific incentive structure that has completely changed the trading dynamics for the last few days of the year. As you manage your Fidelity IRAs or check your Robinhood crypto balance, remember that microcap stocks like this require a different level of attention than blue-chip holdings. The spread on interactive brokers' fees or the way orders are filled on the Robinhood app can matter more when you are dealing with a stock that can move 20% in a few hours. The volatility seen today is a reminder that while the company is showing signs of life, it still has a long way to go to regain the trust of the broader investment community. The legacy of its prior share consolidation and the drop from its triple-digit highs still haunts the chart, but today's price action at 0.87 USD is the first real sign of a sustained reversal. In summary, the story of Fitell Corp today is one of aggressive corporate action